Today on the show, I have the great pleasure to welcome Richard Leftley. Hi, Richard. How are you doing?
Fine, thank you. Great to be with you today.
Thanks for taking the time. Richard, you're the founder of Wavu. It's a digital insurance consultancy. And you've worked for quite a few years as a broker in reinsurance in London, placing reinsurance treaty business from African and Asian insurers. Is that correct?
Yes, that's where I started my career. Yeah.
You also created another company that you were running for 20 years. Do you want to tell us something about microinsure?
Yeah, sure. I started microinsure in 2002 and was the CEO for 20 years. Microinsure was a kind of leading insurtech, providing insurance to about 64 million families across Africa and Asia, selling policies that generally cost somewhere between 3 cents to about $1 a month.
Okay, that's not too expensive a policy. What kind of policies are these?
The policies that we were selling tended to be relating to risks that were very simple. So things like either death or accident, as well as things like hospitalization. I mean, generally it was things that affected a family's ability to earn income.
And you were focusing on the African and Asian markets, no Latin America?
We did focus on Africa and Asia primarily. Latin America is quite a different market in many ways. It does certainly have low-income families, but the role of the public sector is much more robust in Latin America than in other emerging regions.
And then after microinsure, you created another company where you were doing digital embedded insurance. So for our viewers who are not familiar with embedded insurance, what does that mean?
Sure. So embedded insurance is primarily linked to kind of B2B partnerships. So it's where insurance is embedded into some other kind of offering like a bank account or a mobile phone contract. So it's where insurance is kind of almost embedding is removing friction from the customer journey. I think that's the best way to think about it. And Global, which is a business I co-founded, was a underwriting business. So it built upon the experiences at Microinsure, which was a insurtech broker, and it established a reinsurance company initially in Anguilla and then more recently as a Lloyd's syndicate in London.
If you took us back like 20 years ago, what made you decide to try to sell insurance to low-income families?
Sure. So 20 years ago, it was 2002. I mean, this is really early in what became the insurtech journey, if you think about it. It was 3 years before Facebook became a company. And I was sitting at my desk, I was 29 years old, and I just became fascinated by why it was that people in Africa and Asia didn't buy insurance. I remember looking at this kind of table which showed the cost of natural disasters. And it was a table that Swiss Re published every year. And on one side of the table, it showed the financial cost of financial disasters. So this was always like a hurricane in Florida or an earthquake in Japan. And then on the other side of the table, it showed the cost in human lives. And this was always countries like Bangladesh or India, which were badly affected, but for where there was no insurance take-up. Less than 1% of the population in those countries had insurance. And I just kept looking at this table and wondering why it was that people who are affected by risk, bearing in mind this was the height of the HIV pandemic, these people were living with risk every single day, and yet they weren't buying insurance.
You just mentioned it was 1% of insured people basically in these markets. Can you give us an idea of what it is in Germany, UK, or other countries, just so that we can compare?
Yeah, exactly. I don't know the exact percentage, but I think everyone in a developed market would have some kind of insurance, whether it's private insurance or whether it's through the public sector, through kind of welfare or other kinds of public payments. I mean, all of us have a safety net, don't we? If you become unemployed, if you get sick, if you have a car accident, if the bad things happen, we all have this safety net that stops us from sliding back into poverty, whether that's provided by the private sector or by the public sector. In fact, if you think about developed nations, each one of those, they all have either a private or a public safety net. Whereas emerging markets in Africa, Asia, Latin America, one of the things that they're missing is that safety net. So when disaster strikes, people do actually fall all the way back down to the bottom and they have to start all over again.
So you speak about a hurricane, for example. These people's livelihood is destroyed, their house is destroyed. What happens then?
Well, people in emerging markets rely upon a kind of social insurance. So when a bad thing happens to you, if your child gets sick, in Africa, what you do is you send a WhatsApp message to all of your friends, all of the people in your community, and you ask them to help you. and they each send you a small amount of money, whatever they can spare, and they send that to you so that you can treat your child and provide for them. So it's almost like a kind of community insurance.
They were really back to the core of insurance, actually.
Right. And people do it like this because they know that at some point in the future, they themselves will need help. So when it becomes their turn, they will ask their friends. And because they were generous, then their friends will be generous in their time of need. The problem is, of course, is when a community is affected by something like a hurricane and where everyone is affected, then if everyone is affected by a disease outbreak or by a natural disaster, then the community simply doesn't have the resources to look after itself. And so actually, this is why we buy insurance, because the premiums of the many pay for the losses of the few. And if you're only doing that within your village, then if your village is affected, the village simply doesn't have the resources to look after itself. So it doesn't work for catastrophic risk. It only works when individuals are affected using this kind of social approach.
So, for example, with you, just for me to understand, the kind of a micro insurance you were offering in, let's say, a country. I don't know if you did this in South Africa or Indonesia. Can we take one of these as an example? Let's say Indonesia. Yeah. So I want to reinsure. What would I micro insure? Would I micro insure my house, and how much would that cost? How would that function?
No, totally. So generally, we were dealing with very simple products. So the features of kind of micro insurance product, if you like, would be that it would be an extremely simple product. So it would be a product which could be explained in a few sentences. Unlike a kind of traditional insurance that we would have in the West, it wouldn't be 20 pages long with lots of exclusions. It would simply say, if you die for any reason, so there would be no exclusions, then we will pay you this money, right? And typically the payouts would be a few $100s or up to a few $1,000s. The policies wouldn't be individually underwritten, so we wouldn't take into account your own personal experiences. There would just be a kind of one size fits all kind of product. So there would be very limited friction in the sign-up process. So these are very simple products, which are incredibly easy to sign up for, oftentimes as easy as just sending a single text message. So if you want to buy this product, you just send a text message, a kind of short code, and that's it, right? The premiums would then be collected in very small increments, often either daily or weekly or potentially monthly. The products would cost somewhere between 3 cents to about $1. So for example, life insurance would cost maybe 30 cents a month for $1,000 of coverage. Something like basic health insurance, which would be a product whereby if you were hospitalized for 2 nights or more for any reason, then we pay you $500. That kind of a product would cost 60 or 70 cents per person per month. And we would collect the money in very simple ways from you. So it might be that we deduct the money from your airtime balance, literally from your phone. I'm taking a tiny balance every day of your airtime to pay for these insurance products.
Well, this was very interesting. And how did you scale this business around Asia and Africa?
First, we started off, what we realized was that it was impossible really to go family by family. Very quickly, we discounted a kind of B2C model. You can't sell insurance to people when it's $1 a month and pay for the agency network that you need in order to go kind of household by household. So you have to find a kind of B2B or a B2B2C model, which means that you need a partner who reaches these consumers, is trusted by these consumers, and has the ability to collect money from these people on a regular basis. So initially, we started working with these microfinance banks. So these were organizations that were lending money to these families, and they were concerned, of course, about the families being able to repay the money. So their concern was, how do these families repay the money? If they die, if they get sick, if they have an accident, if something happens to them, how will they repay the money? And so they were interested in embedding insurance into the loans because obviously it would help the family repay the loan in the case of a disaster. Once we had kind of like worked in partnership with these organizations, we realized that we had to go beyond just microfinance banks. And we started to look at other organizations that we could work with. In 2009, we worked out that we could partner with mobile phone companies. So mobile phone companies are ubiquitous in emerging markets. Most people, however poor they are, have access to a mobile phone. And we realized that these were companies that were really trusted by these communities because whenever they paid some money to buy airtime to make phone calls, it worked. And so we realized that there was an opportunity for us to partner with these brands to reach the communities in huge numbers. Of course, the challenge was how? How do you do that? How do you make it kind of relevant? How do you convince these telcos to offer insurance, which isn't one of their core businesses? And we hit upon an idea around using insurance to change customer behavior. So one of the problems that the telcos faced was that their customers weren't very loyal. In emerging markets, customers are kind of pay-as-you-go customers. They buy small amounts of airtime, but they also have very little brand loyalty, happy to work with Vodafone or with Airtel or with MTN. And so what we discovered was that people were willing to change their behavior. They were willing to become more loyal to a brand like a telco if there was insurance embedded into kind of purchase. And so we started to sell insurance.
That's very interesting. So Richard, basically you were using insurance to increase loyalty for these telco companies.
Absolutely. What we discovered was that telcos weren't interested in selling insurance. And I think this is a mistake that a lot of people make in insurtech and embedded, is that they imagine that telcos, banks, ride-hailing platforms are interested in selling insurance. They're not. What they're interested in is being a better telco. They want to have more customers who stay with them longer, who spend more money with them. And so what we realized was that it wasn't enough to go and say, hey, we've got this really simple insurance with really frictionless customer journeys, because the telco would look at us and say, so what? How's that relevant to me? So what we had to do is position it as, hey, look, we think we could make you a better telco. We think that we could actually get you more customers who are more loyal, who stay with you longer, who spend more. And if we do that, are you willing to position this insurance product as one of your core products? So instead of it being positioned as insurance, it's being positioned as a core product for the telco to make them more successful at their core business.
It's a loyalty program you basically set up for them. And you know what is interesting? Because we get the question quite often, how do we set up loyalty programs for insurance themselves? Because people are not loyal very often to insurance either. Now, in this case, I like what you're saying, because you basically use insurance to make it a loyalty add-on.
Yeah, we flipped it on its head, and actually it was really successful. I mean, the most successful one of these products, we had 20 million people sign up for it in just 140 days. I think it was probably the fastest growing voluntary insurance product in the world. And of course, the secret there was just that we found an alignment with a telco who had a problem. They wanted to rebrand. They wanted to be relevant to their customer base. They wanted more customers. And they saw that this product helped them achieve those objectives. And as a result, they were the ones pushing TV adverts and radio adverts. And suddenly they were pushing it because it aligned with their core objectives. So you asked, how did we reach all these people? Well, initially it was through microfinance organizations. Then it became about telcos. And more recently, it was about these kind of digital platforms. So ride hailing or street delivery organizations. And of course, what was really interesting for me in the last few years, not just that these kind of micro insurance products were for emerging consumers, but increasingly we started to see it moving into developed markets like the EU and the US.
Yeah, I like what you were saying, Richard. That's really awesome. Really interesting, you know. So when you speak about micro insurance, it's very often meant to be for low-income families. Did you take out any lessons learned for insurtechs in developed countries?
Yeah, absolutely. So it's interesting. Microinsure was all about emerging markets. And we learned a lot of lessons about how to establish these kind of B2B partnerships and make them really successful. But when we set up MIC Global as a reinsurance company, it became very clear to us that we had to work kind of globally. So not just in emerging markets, but also in developed markets. And it was interesting that the lessons that we'd learned around how to kind of create these very simple products and to remove friction from the customer journey were just as relevant in developed markets like the US. So one of the first products that we did in MIC Global was that we were able to embed a very simple insurance product into a video doorbell. So the video doorbell was recording the doorstep, and you could see when someone from Amazon came and dropped off a parcel. And if someone came along and stole that parcel, then you could have a parametric insurance product, which just simply said, okay, sorry, the parcel's been stolen. Send a text message to the owner of the house and say, hey, sorry, your parcel was stolen. Here's 50 euros for the inconvenience. Or if the food is late, you order food from Uber Eats or from Deliveroo. And if the food is late, then the food is free. right? How great would that be? Or working with organizations like Airbnb, where traditionally the insurance covered catastrophic events like the property burning down, but it didn't cover things like someone dropping a glass of wine on the carpet or someone breaking the TV. And so these kind of microinsurance became not just about helping low-income families, but the same principles could be applied to short duration or short distance. That was the definition of micro. And how could we deploy these kind of digital embedded insurance products into developed markets for short distance, short duration insurance products?
Are these examples of things that you think someone should do or could do, or is it something you actually did implement?
These are things that the team at MIC Global have been implementing. Yeah, and it's really interesting to see, as now a Lloyd's syndicate, so at the heart of the insurance market, they're bringing in those kind of micro insurance products into the future of insurance. And yeah, so we are starting to see these lessons that are learned often in emerging markets, and they are very relevant for how we serve gig workers, for how we serve millennials who want very simple products, very limited the customer journey. And those lessons learned the hard way serving low-income families are just as relevant in these new segments here in the West.
What is your top 3 advice in microinsurance? What did you learn from there?
I think the key thing I learned was how to structure B2B partnerships, because microinsurance, of course, you need to have a great product, a really simple product. Of course, you need to have great technology that can massively reduce cost when you're selling these kind of 3-cent policies. But at the end of the day, all of these things won't work unless you really understand how to structure B2B partnerships. And one of the things that we learned was that we needed to partner with organizations that had key attributes. So in order to be great partnerships for us, they needed, firstly, to have a large number of customers. The second thing that they needed was that those customers needed to use core service, their bank, their telco, their food delivery, on a regular basis. And this regular usage is actually trust, right? The reason that we trust our telco is because when we buy airtime, it works. So when we use our bank and it works, then we trust them. When we order food and it turns up and our credit card details aren't compromised, we learn to trust that brand. So leveraging that kind of frequency of use and that trust is really important. The third thing in emerging markets, because people don't have bank accounts, is that these partners have to have a seamless, frictionless way of collecting payments from the customer. This is really an important kind of feature in emerging markets. But the fourth feature is the most important. And the fourth feature is that these B2B partners need to have a problem which we can fix by introducing insurance. So if it's a bank, it's about how do I make sure that this bank account they prioritize? If it's a telco, how do I get more customers? How do I keep them for longer? If it's a ride-hailing platform, how do I differentiate myself to not only the drivers that I need to make my platform successful, but also to the riders who have a choice about which platform they use. And so if we could position insurance as solving one of the core business problems of our partners, those were the most successful partnerships that we had in the microinsurance space. But also, I would argue that that argument is just as relevant for developed markets and for insurtechs looking to develop B2B type partnerships and embedded insurance in the West.
What about, now you named several industries, but what if you had a partner which is an insurance company actually?
So I hate to say this, but I think insurance companies are the least important part of the partnership mix. The truth of the matter is that they are increasingly kind of commoditized. And the reason for this is because, unfortunately, the nature of insurance means that we pay our insurance premiums and then we hope not to use the product. So if you compare a telco with an insurance company or a bank with an insurance company, the primary reason I believe that people trust the telco, the bank, more than they trust an insurance company is around frequency of use. If you're a pay-as-you-go customer, then every week you pay some money to the telco and in return you can make phone calls and access the internet. And it works. And so you make a payment, it works. You make a payment, it works. And so subconsciously, you have this kind of reinforcing mechanism of when I pay money to this organization, they give me something and it works. When you think about insurance, we pay money to the insurance company and then we hope never to need to make a claim. And if we do make a claim, frankly, most people's experience in emerging markets is that it's really hard. It's really difficult. And therefore, we don't really trust the insurance companies because we don't have an experience of paying them money and then using their service.
Would you change something like this to make it that the insurance actually also does that, to build trust, basically?
I think that the only way to do that is to build products which encourage people to make frequent claims. So if you think about insurance over the last the last 10 or
interest in listening how you're going to do that.
Well, okay, so let me give you an example. So I think traditional insurance has increasingly moved away from day-to-day risks and more so towards catastrophic events, right? So insurance companies are happy to insure your house if it burns down, but they don't really want to deal with the small day-to-day kind of conveniences. So I think that the kind of insurance products that we could be launching are things like, if your food is late, your food is free. You know, how many people once a week order food from Uber Eats or from Deliveroo? And there's an opportunity for us to introduce insurance alongside that. So when you use that app, you're asked, hey, would you like to have this kind of food is late, food is free product added on to every order that you make? So if you order 10 euros worth of food, 60 cents or 30 cents is added to each of your orders. And if it's late, it's free. Or how about a product where when you go on holiday, rather than travel insurance, which you hardly ever make a claim on, you have a product whereby if it rains for one day of your holiday, you get 200 euros to say, sorry, just money that you put in your pocket so that you can go and do something fun on that day. And instead of having to make a claim, it's just automatically triggered and it just appears on your bank account or your digital wallet with a text message saying, hey, sorry, it's raining. We know where you are. We know it's raining. We know you're on holiday. Here's 200 euros to go have some fun. That would radically change people's view of insurance.
So your advice to insurance companies could be, please accept more claims, make them more seamless to be paid out so that you build trust. And that's how you get loyalty from clients. Is that what you're saying?
Yeah, frequent small claims, seamlessly, frictionlessly paid, which would build trust in insurance as a mechanism. And then people would be more willing to buy the catastrophic products that people want to sell them.
Very interesting. I like that. Much of your work has been focused on leveraging B2B partnerships. How do you set up such a partnerships? What are the key criteria to have a successful partnership of that kind?
Yeah, we've talked about this a little bit around these kind of 4 requirements of having lots of customers that use the service frequently, having kind of embedded payment mechanisms and being able to solve the problem for the partner. But I think it's around the most successful partnerships have been where those things have been clearly transmitted at the outset, right? Where we've been able to reach agreement as to exactly how those things are important to each one of the members of the partnership. All too often, when you're dealing with big corporates, they try and hide away what are the things that are important to them. And I think that's a real mistake. I think that actually a small company, small innovative company can come in and find solutions that help a B2B partner be more successful at their core business. And those are the most successful partnerships that I've seen.
How do you split the pie with a partner? Say, hey, I'll do the microinsurance for you. How do we split it?
Yeah, it's a really interesting question. And it's one where I feel like the best approach is one of transparency. So the best partnerships we had was where we came along and we said, okay, so let's try and understand what is the biggest problem that you face in your business. So for example, a ride hailing platform might say, oh, I'm really struggling to attract and retain drivers. And if I don't have drivers, then I don't really have a ride hailing platform, right? So as Uber, how do we attract drivers and how do we differentiate ourselves from the competition? And so what we did was we said, okay, so if we could help you attract and retain drivers, what would that be worth to you? And so we set them the challenge of trying to put a monetary figure on that. And they say, well, they go away and they look at how much does it cost them to attract in terms of marketing, to train, to deploy, how much does it cost them? And they say, well, if you could keep a driver with us for 3 months, then we'd be willing to pay this much money, $1 or $2. If they were with us for 6 months or 9 months or 12 months, then we'd be willing to pay this much money at each of those intervals. And then we take that money and we go away and we say, okay, let's design an insurance product. So let's design an insurance product for $1 or $2 or $3, and then go back and say to those drivers, do product market fit and say, okay, if you stayed with Uber for 3 months, I'd offer you this much insurance. If you stayed for 6 months, then you could add your wife. If you stayed for 9 months, you could add your children. Would that affect how you viewed Uber? And what we then found was that actually it had a huge effect in terms of attracting and retaining drivers for a ride-hailing platform. As a result, the articulation of the split of value wasn't so much an argument about what commission we gave to Uber, because in fact the commission became irrelevant, because retaining and attracting drivers was the lifeblood of their business. It was worth hundreds of dollars to them, much more than the commission on a $1 insurance policy. So I think the worst partnerships are ones where the partner becomes fixated on what commission they're going to earn. Those partnerships are never going to last that long, and they're not going to be that productive. The best partnerships we found was when the partner literally didn't care what commission they got. In fact, they could get zero commission because what they were doing with the product was much more fundamental to their core business. In the case I gave you, retaining and attracting drivers as a ride-hailing company.
So you're talking about some strategic partnerships rather than some which are just focused on the commission. In the case of Uber, I find this very interesting. Is there any way you can share how many thousands of Uber drivers did you protect with your services, with your insurance?
Oh, we were working with a ride-hailing platform in an Asian country prior to COVID. And we introduced initially a voluntary product. So the product was a very basic kind of health insurance. If you got sick and hospitalized, then the product would pay like 1 week or 2 weeks or 3 weeks of the earnings that you would have made if you'd been driving your car. So if you were sick and you couldn't drive, then the product paid your salary or your earnings. And we were offering this embedded into the driver app for one of the big, I can't tell you which company, but I guess you can guess. And this product was a voluntary product. And then along came COVID, and a lot of countries had lockdowns. And what this ride-hailing company found was that drivers were leaving in droves. Many of them were just leaving because there was no work. There was a lockdown, so they were leaving. They weren't coming back to work. But what they noticed was interesting was that those people that had voluntarily taken the insurance were much more likely. In fact, they were nearly 100% likely to stay, because the only way for them to pay for the insurance, which now they valued even more because of COVID, the only way for them to pay for that was to remain a driver with this app so that they could pay for the insurance premiums. So very quickly, the ride-hailing platform started to offer this product, which cost about $1 a month, and they started offering it to all of their drivers. They saw that actually it was a fantastic way of retaining the drivers. And from that moment on, they didn't lose any more drivers, right? The drivers were willing to stay even through the lockdown. And then when they emerged from lockdown, they were the only ride-hailing platform that had drivers. And so when the lockdown ended and people wanted to order a ride-hailing, they were able to get massive market share.
A compelling success story there.
Yeah.
For these kind of models, actually. A great example of how to use insurance in that case. Okay. So you said that your latest venture was 6 months ago. So do you want to tell us what this is about and how does that work?
Sure. So Wavu came about because I was fascinated by all that I'd learned over the last 20 years, and I wanted to try and deploy it into other opportunities. So I realized that working within just one company, it was great. And I'm still involved with MIC Global, fantastic company. I'm still an advisor and a shareholder. But what I realized was that I wanted to work on other projects as well. And so Wavu gave me that opportunity to do it. So one of the things that I'm involved with is the team at ARC. So ARC is a venture building studio, and we are building kind of new ventures which address the kind of systemic risks facing humanity. So we've identified that there are big risks around climate, around kind of health and wellness, especially around mental health, around data and how data is being used, the metaverse and disinformation. And so these are some of the big risks that are facing humanity. And we want to set up new insurance ventures which are addressing these risks. So I've been involved in the last 6 months in setting up 2 new ventures. One is called Migrasure, which is based in the EU. It's funded by some of the big kind of insurance companies, and it's focused on the needs of vulnerable migrants and refugees. So there's a huge wave of refugees and migrants coming into Europe, and they have very specific insurance needs that the insurance market isn't really addressing. So Migrasure is being set up as a new insurance company to address those risks. And then the second venture is called Ubuntu, which is an interesting collaboration between the pharmaceutical industry and the insurance industry. So some of the biggest pharmaceutical companies like MSD, Roche, Pfizer, as well as people like the Gates Foundation, and then Swiss Re and Daiichi Life from Japan, coming together and saying, let's create a kind of global reinsurance platform to provide wellness and health insurance solution to the middle income market, which is often excluded from insurance in emerging markets. And so within just 6 months, we've been able to get a couple of new ventures up and running. And I'm really excited about trying to set up new insurance ventures that address some of the biggest risks facing humanity in partnership with people from ARC and the venture building studio that they're creating.
That's where insurance is interesting, because that's when you connect it to the actual thing that insurance does. It's protecting people and their livelihood and the families. One thing, you just mentioned the migrant insurance. How does that work? What kind of insurance do they need actually, or do they have or not?
Yeah, it's super interesting. We started off by mapping out the journey that a migrant goes on from when they decide to leave their home country, when they're in transition, traveling, when they first arrive in their new host country, but then also when they transition from being a refugee and the responsibility of the state to being a private citizen in their new host country. And what we realized was that there were risks all the way along that journey, and we had to start somewhere. So what we decided to do was to start with the easiest, the lowest hanging fruit, which is when they transition from being a refugee to being a member of their new host country. And there's a lot of risk associated with securing private housing. So what we realized was that landlords, and often in Europe, these are big commercial businesses that have many thousands of apartments. They want to provide housing to these people, but they're worried about many things. They're worried about whether these people are more risky. They're worried about whether they'll be able to pay the rent. They're worried about whether they will damage the property. Oftentimes, not for reasonable reasons, in my opinion, but nonetheless, these are concerns that they have. And so these become big blockers for refugees as they look to rent their first apartment. And so what we've done is we've focused on this, and Migrashare is just launching in the next few months in Germany, and we're offering products that will help address these concerns, both from the landlord's perspective, but also from the refugee, from the tenant's perspective, around how they pay rent and any issues around being able to not damage the property. But we're combining it not just with insurance, but also with a whole bunch of support services that help the person as they transition into becoming a member of the society. If you come from Syria, you may not understand exactly how things are done in Germany. Where do you turn to? How do you get that information? And so it's insurance, but it's also helping people learn how to become members of their new societies.
That sounds really great. So how do these migrants find their way to your microinsurance for them?
Yeah, again, it's around these B2B partnerships. So what we're seeing is that we have to partner with these commercial landlords who are renting apartments, but also with the municipalities, right, who have an interest in these individuals transitioning from being the responsibility of the state. So the municipalities have to pay for their accommodation. And we can partner with those municipalities to help provide insurance. If the insurance unlocks access to a private tenancy, then the municipality is very interested because it's a lot cheaper to pay a €10 premium than a €1,000 hotel bill.
So how do you access all these municipalities? Because I can imagine it takes a lot of time. I would like to speak to the mayor of the city. You do one after the next. That can take years before you get the market. I assume that's not your way to scale up.
Yeah, again, it's around finding organizations that can help you reach those people quickly and in a trustworthy way. We've been very, very fortunate to combine the best of the commercial world, so insurance companies, with the best of the not-for-profit world, so foundations, but also organizations like the UN and the Danish Refugee Council that are trusted by these municipalities. And when we go in with those organizations, you can make an awful lot of progress quickly.
And there you already have a credibility, because I assume a lot of companies try to approach them and say, hey, I would like my service to be provided by your entity. So I assume it's quite difficult to get in contact with them. Or is it easy for you?
It makes a difference if you have a track record and a credibility of being a social entrepreneur. So if you spend 20 years helping people that are excluded from insurance to have insurance, it gives you a bunch of credibility in those conversations.
So you speak about a social entrepreneur. Is social impact, is that a key driving factor behind your work, or how do you see that?
I think, I'm a social entrepreneur. I'm interested in businesses that have both a social impact as well as a financial impact. And I think you need both. I think it's very difficult if you only approach this market with a financial mindset. And it's also very difficult if you only focus on the social side. You have to do both. It has to be a business that has a purpose, a social purpose, as well as a financial. And you have to hold those in balance, right? So for me, the social impact is a key driving force to me and the work I've been doing over the last kind of 20 years. Sitting with, listening to, understanding the clients that you're serving is critical. And I could talk, or I could share with you stories of how that has changed my opinion, how it's changed my view of the products that we should be offering. But I also believe in the power of capitalism, right? I believe that actually, if we don't make profit from these products, then actually we won't be able to unlock resources, investment, money that we need, partnerships that we need. And as a result, if there isn't profit, then the world won't get behind us and we'll have less impact as a result. So combining those two and holding them in tension is a challenge, because naturally there's always trade-offs. If you want to make profit, then you're going to make less impact. But it also, if you want to have impact in as many people's lives as you can, you are going to need to make some profit. And so holding those things in tension and finding the right balance is really critical to success as you build these ventures.
So you're combining social impact and financial return. What a beautiful project. Now, I would like to get to one of our last points for today about the future. What kind of trends do you think we should be watching for?
Yeah, I think we're in a very interesting time right now for insurance. There's been a bit of maturity around this whole insurtech discussion. So 10 years ago, insurtechs were going to change the world, disrupt insurance. And I think that we've moved now to a realization that actually it's much harder to disrupt an industry like insurance. And so insurtechs have become much more around partnering with insurance companies and finding new ways to distribute products. And so they've become more innovating in the distribution of insurance rather than wholesale disruption. But I think what we're now seeing is that the insurtechs that have succeeded are starting to realize that they also need to take on a role in the underwriting of the risk. And so I think that we'll see that continue and accelerate. So the most successful insurtechs, which have been primarily around distribution and they've been in a brokerage mode, they will start to transition into being MGAs or taking on underwriting functions. I also think that technology continues to just change the world, right? I mean, in the last 6 months, AI and these chat GPT have had a huge effect on society and the way in which we look at things. And I think that that is opening up new opportunities for removing friction from customer journeys. So for example, machine learning is becoming increasingly powerful. So we can start to think about products which before were impossible, like embedding a dent and scratch insurance. So a small product which pays out a few $100s if your car gets scratched when you park it. And you can embed that in the app. So when you pay for the parking, you also pay for the insurance. And you can use a video just to go around your car and show that there wasn't a scratch. And then when you come back, to show the scratch and to get a payment. Those kind of products were impossible previously because it would be too expensive to get a person to review that claim, but a machine can do it very quickly and very cheaply. So I think we're starting to see that there will be a range of products which weren't previously possible, either because you couldn't actually verify the claim or you couldn't sell and distribute the product in a cost-effective way. And so I think those are the trends that we're going to see and that we should be keeping an eye on as an industry.
So you're very much linking microinsurance and embedded insurance, if I understand you well.
I think actually they're the same thing. This may be an unpopular view, but I don't think embedded insurance is new. We used to call it affinity or microinsurance or group insurance. In many ways, it's existed for many, many years. Embedded insurance is just simply the newest way of describing something that has been happening for many years. But I think, of course, in the digital era, there are different ways of putting insurance into a good or a service, which previously weren't possible. And that's what we're calling digital or embedded. But in fact, the concept has existed for many, many years.
Now, speaking about the future, we can also see that a lot of things have changed with the blockchain. Can you see any role for the blockchain in insurance?
Again, I think my view might be quite strong and quite unpopular. I think...
Go ahead.
So I think blockchain today remains a solution looking for a problem. That isn't to say that in the future it won't become important and significant. But I think when blockchain was introduced, people imagined that it was going to radically change the way in which we do insurance. And I think that there have been some interesting case studies and some interesting ways that it's been used. But the truth of the matter is that it hasn't really had a huge effect or impact on the world of insurance. And I think the reason for that is because it isn't a better solution than we currently have to the problems that we face. So it isn't a better way of selling insurance or collecting premiums, or even, I would argue, it could have the biggest impact in how we verify and pay claims. But even that hasn't really taken off to the level that we imagined it could. So I think there's still a huge amount of potential. It's just about finding what blockchain fixes for us as an industry, which is better than the current solutions that we're using. And I think we need to focus on that. And then I think there'll be breakthroughs.
So the last technology I would like to get your point on is the famous Metaverse. Is something, it's just a bubble. I see your little smile there. So what's your take on that?
I think the metaverse will take off to some degree just because the amount of money that's being thrown at it, and I do believe it will impact the way in which we go about our lives in the future. And whether that is the spectacles that I'm wearing in the future will be able to convey a kind of additional layers of information as I look around myself. I'm not sure. I'm not an expert in how exactly it will, but what I am sure of is that it will introduce new risks to society. And that is an opportunity for the insurance industry to step up and to lead the charge in terms of working out how to mitigate those risks so that people use the metaverse to its full potential. And so I think there will be new business models around disinformation, around how our data is used, that will open up product ideas. And that's certainly something that I'm interested in working on as we move forward.
Richard, that's exciting. Thank you very much for your views. I really enjoyed the discussion and I learned quite a lot of things there. So thank you very much for this. What can we wish you for the years to come?
Thank you. Yeah, it's been great to be with you today. I think, what I would love is to live a happy, healthy life. I think that's what all of us hope for. For me, happiness is doing things I love around innovating, designing, finding new ways to do things. And I feel really privileged to be in a position where I can work on a number of really cool projects in the years ahead.
So Richard, I wish you a very happy life and I hope we'll catch up in the months to come.
Thank you very much.
Thank you very much for your time. Take care. Cheers.
Bye.